back, everyone. It's been a couple of weeks since I was here. Last week, we had an opportunity to go take a little bit of a sneak away to Hawaii. When was the last time you may have been to Hawaii? We went to Oahu. That was definitely a very good time. But for today's show, we're going to be going over several different headlines, and some of them you may have already seen. Silicon Valley tiny home sells considerably over $1.7 million listing price. Now, why did this particular one catch the headline news for a lot of media? Because it was a one bed, one bath, 384 square feet home in Cupertino listed at 1.7. We're going to talk a little bit about this one. And so you can see for yourself, if you have the ability and the interest, it's obviously worth a whole lot more than 1.7 for a reason. The other thing that we're going to go over, luxury real estate prices just hit an all-time record. How is that, or why is that the case? Former HGTV star gets jail time for Bay Area house flipping fraud. We're going to point out a few things that you got to really know as you think about any of these kind of investments. And yeah, we're going to talk about a little bit about that. Before I got into real estate as a realtor, I spent some time doing some house flips. So that's part of the reason why I know a lot about these renovation projects, how much things cost, but also I know about the network of the people that are actually doing it. And you really gotta be very careful as to who this could be, who you're going to be investing with to do these kind of projects. Now, make no mistake, you can do all the due diligence you want. You can still get scammed, but there's a few things that you can do just to protect yourself, minimize the chances of that. Right. The other thing, mortgage rate lock-in effect in Bay Area is more dramatic than anywhere else. We'll talk a little bit about that. Is that really hindering supply? I have a different opinion about that. You'll see momentarily. And this week, lots of news, right? Lots of news from the big tech companies. A lot of their earnings reports came out. So we're going to talk a little bit about Tesla, because Tesla had a decent sized layoff that occurred, about 10% layoffs. Alphabet, Google, Microsoft, Nvidia, Apple, right? All these different companies had different earnings. And so we're going to see some of them had an impact downwards. Some of them had to actually impact upwards. So we're going to see, does that really impact much of the Bay Area real estate market? So let's take a look together. Let's go over the first one. Silicon Valley tiny home sells considerably over $1.7 million. Let's talk about that. Cut all these articles. Hopefully you guys can hear it. Okay, so that was that, right? So what was this home? Let's take a look at this together. It was this property here, 10036 Carmen Road, listed by the Bonafide team. And so you can take a look at it. I mean, it's a small home. It's basically, it's literally a tiny home. It's a one bed, one bath, 384 square foot. But the key, it is sitting on 7,841 square foot of a lot size. Now, this particular one, though, is actually not in, it is next to a busier road. So it's off of Stevens Creek Boulevard in that area. But if you saw this, what was your initial opinion? If you were educated and you actually watched this show a lot, everyone that watches this show knows a whole lot more about real estate than all of your other colleagues and friends, because you're taking the time, you're researching, you're understanding what is really happening versus these headline articles that appears each and every week. But if you saw this, yes, absolutely. If you look at the price of this and you compare the size, of course, it is absolutely incredible and insane. But imagine if this was a piece of dirt and there was no home. And so these numbers are zero. And think about it, if you were a builder and you're trying to build homes and you had a sense as to what other homes nearby are going for, how would you potentially value this place? So right now, the cost of construction, if you're going to build something this large, is at maybe 500 per square feet. Now it can range, it can go higher, it can go lower, but around 500 per square feet is not an unreasonable assessment for this kind of home. But keep in mind, you're going to be building a brand new home. And if you knew that a neighbor, a literal next door neighbor, goes for 3.2 for a 2,100 square foot, slightly bigger lot, not that much bigger, let's do some math backwards, right? And let's also compare it to this particular home. This home itself is a nice home, but it isn't like a new construction home. Like everything is remodeled inside, and it is a beautiful home, but it's not like a new construction home, right? And so if that was the case, let's do some math backwards, right? If it was just a piece of dirt, how much would one be willing to pay for this? If it costs about a little over $1 million to do, technically, if you bought this even anywhere at plus or minus 2 million, you still have a tremendous amount of equity in that home. And quite frankly, it's going to be selling for a whole lot more than this because it's a newer construction home, right? I mean, take a look at this one. This one is pending nearby, right? But it's been on the market for a while, but it's on a very small lot, and it's 2220. And this is a newer one. Take a look at this one, right? Here's a good example. This is a newer construction place, right? Newer construction home. This was a 4x4 bath, 2783, sold for 3,624. So the idea is, if it costs about plus or minus $1 million, even if it's 1.1, you can do the math backwards. Assume it's going to take, let's say, 2 years to do. So you can do that math backwards. So really, if you're spending at around the high 1.9s too, it's not even that bad, right? Just think of it, if it was an empty piece of dirt or like an empty lot. That's the way you want to think about when you see something like this, because that is the real value of it. Now, of course, somebody can live in this and just hold on to it, because the land, certainly, as you can see, also appreciates very well. But so does the cost of construction. So either way, there's going to be a huge spread, because someone's going to be able to have this canvas that they can do what they want. And then they may build bigger. Now, in this area, you can see a lot of the homes are between 2,000 to 2,800. So how much bigger would they want is really up to them. But you can see they can still certainly make it bigger. Like even going to 2,756, look at this one. It sold for 4.3. So that, because think about this, right? The spread of the homes, your cost of construction is 500 plus or minus. But you look at this, like what's the price per square foot, even at something this large? At 4.3 million. Right, divided by 2,756, similar lot size, is at 1,560 per square feet. So that's the beauty of doing additions. If you can afford it, and if you have the interest of doing it, and you have the proper layout of it, doing additions or doing teardowns, because that's a huge spread as you can make it as big as you can make it in a particular area. So not surprising. Do not be surprised if this is going to sell at, if it ends up to be plus or minus at the very least 2 million, because you can see there are many clear examples that can make this really, really interesting at those figures. But the news articles obviously picked it up, and a lot of people have made comments about it, about why Bay Area sucks, and et cetera, et cetera. So just you know that. Now, luxury real estate prices just hit an all-time record. Luxury real estate sales increased more than 2%, posting the best year-over-year gains in 3 years, according to Redfin. Median price of luxury homes, a record of 1.2225 during the period. And there's some math as to how this is calculated. I want to say the math was, they have a segment. I think it was like the top either 10% or 5% of the market. But the idea is, yes, regardless of what the rates are, homes have done tremendously well. Why is that? The big reason is because, especially people in the Bay Area, most of the big gains and most of the increases of what we're seeing is because of the general stock market. And because a lot of these people have a lot of assets, when the stock market has done so well, they have been able to then fund a very sizable amount down to basically minimize the loan size, right? So while the interest rates are actually, quite frankly, in the same realm as it was for the last 2 years of plus or minus 7%, people have been able to put a sizable amount down. Because if you take a look at the S&P as an example, right, the S&P in the last 6 months has gone up 23.86%. Even with the recent small decline that it has, it's still almost a 24% increase since 6 months ago. And so why won't a lot of assets increase by that same percent if the general markets did? Now, there are different companies that have done better or worse than that, and we'll take a look at that momentarily. But this gives you an idea of why this is happening and why there is so much still growth for many home prices. Now, I'm not projecting that this is going to last forever. That's the last thing I'm going to say. There are clear headwinds that you have saw in the last 2 weeks. But at the same time, it's also important to be having perspective. Yes, just because your stock, if you worked at specific companies this week, may have dropped 10, 15%. The reality is, how much has that still been relative to even the S&P, right? We're going to compare that at the very end. Like, is it really that much of an impact? Like, yes, obviously mentally, you'd be like, oh, my purchasing power is 10% off. But compared to even if you just invested in the general markets, you may still be doing a lot better unless you worked at Tesla, and that's a very different situation. But we'll talk about the silver lining on that. But that's something to be mindful of. Now, not all Bay Area homes are luxury real estate, but that is a big part of the reason why you see what you see all throughout the entire Bay in terms of prices altogether. Now, part of that aspect is this whole concept of mortgage rate lock-in effect in Bay Area is more dramatic than anywhere else. These charts show this striking trend. So here's a chart comparing our area versus just a bunch of other places throughout the country. And they're basically saying the spread as to what is the average existing rate that people have today in the Bay Area, which is a phenomenally low number, right? The average existing amount is 3.56. The average today to get something is plus or minus 7%. And so they're basically highlighting that this is some of the biggest spreads that there is. And as part of the biggest spread is some of these very low rates. So one question you may have asked is, why isn't this actually impacted everywhere in the country, right? Like, is it unique to the Bay? It kind of is. And I'll go over a particular reason why. The particular reason why is because the home prices are higher. But then, Spencer, you might be thinking, wait a second, if the home prices are higher, what does that have to do with anything? So how it works in the Bay Area and how it works for mortgages is, quite frankly, the more expensive the homes are, those will be in a different loan category, which will be called like a jumbo loan, right? So there is a jumbo loan category. But if you actually look into it, jumbo rates are lower than conforming rates. But you're maybe thinking, wait a second, how is that the case? I thought jumbo rates are generally more expensive. That's because a lot of the big banks have programs to lower your interest rates by moving money in kind. And so because home prices are more expensive, but also because the other variable, people earn and have a lot of money here, a lot of people can move their money from a stock account in kind. You don't have to sell stocks. You just move it from XYZ E-Trade or something to a Wells Fargo, if you're going to move for Wells Fargo or Chase or Bank of America, whatever it may be, or Citi or BMO. They all have these programs where you move money in kind, and then the day after you can move it back if you wanted to. But the fact that you move money can buy down your rate by a good amount. I've seen it more than 0.5%. Now, I bring this up because this has been going for a long time. This was an option even when you were to do refinances. So when you get a refinance, you can also do the same game and same process. So the average rate in the Bay Area is actually lower than most places in the country as a baseline for that reason. Because people, one, have more money here. Two, they are able to just do this kind of game, right? There were caps of it. And some of them, we're not talking about even the ultra high net worth or anything like that. Nothing crazy like that. We're talking about generally for a lot of people that they're able to move money as increments, 250, 500, 1 million, whatever it may be. Like they're able to do that, and they're able to take advantage of these really exceptional rates just throughout the time, right? And even when you buy it, you still have that option. So you can see in general, like you have that very low baseline. Because at the end of the day, the people that are buying are going to be buying kind of similar rates. Like their purchase amount can also be a little bit less, right? Because of the program that I just shared with you. But that baseline is so low. That's why you see the spread in the Bay Area, right? San Jose, Sunnyvale, Santa Clara, San Francisco, Oakland, Fremont. You have Santa Cruz area, Santa Rosa. Like it just has the biggest spreads for some of that reason. But it's not that big, much bigger than others. But as you can see, compared to the general US, it's about 0.4% less than others. So something to be mindful of. It has nothing to do with the lock-in effect, actually. And this is a different comment that I want to make. Even though it's dramatic, people are still actively moving as we speak, right? Like even right now, in the last week, I had 4 meetings with people that own homes, either a condo or a townhome or a single family, and they're moving now because it's been 2 years. The rates aren't getting better. Fortunately, the stock market has done well. Fortunately, home prices have done well, and so they're moving on, right? Because think about this: like, how much longer are you going to keep waiting? Like, are you really going to bet that interest rates are going to drop in any time in the near future, given what we have seen? The odds are probably very low. So this is going to be the case probably for some foreseeable future. So don't bank on rates. Now, are you expecting the market to keep getting even better? Maybe, but it's pretty damn good now, right? Given all things that we have at 7% rates, right? So because of that, people are like, look, it's time to make a move. We waited 2 years. We need to get a new place. We need to get a bigger place. We need better schools. Our life has changed. Now we have another kid, right? Like all these things have already progressed. People have held on, hoping that things will get better rates-wise or whatever it may be. Fortunately, one thing did get significantly better, which was the stock market, and that's a big part of what you're seeing. Now, I'm not going to comment about the specific individual, but I'm just going to comment on any of you that have thought about just how house flipping works, right? So I personally have done it. So the way, and I'll like open up the kimono for this just so you understand like the structure. And so on one end, you see these shows, right? There's plenty of shows on HGTV, and there's a lot of forums and groups that are like people doing it. And so people can make a lot of money. People can also lose a ton of money, and there could be some unfortunate things in between, just straight up fraud. And I've personally seen a lot of this happen. Now, think about this. When you buy a home, let's go over the real numbers. So the real numbers is, let's say you buy a home for $1 million and you're putting like $100,000 to renovate it, or maybe let's say you put $200,000 to renovate it. And then you're going to then sell it for, let's say, a good profit because you're able to get it for such a great deal. Let's say you sell it for like 1.5. You can see that person had the potential, we'll worry about fees and all these things, a potential spread of around, let's say, 250 to 300, and then minus any sort of transaction fees. Let's say it's $200,000. On one end, it is an incredible amount, right? The dollar and the money is significant when it comes to these kind of projects. Now, the question you may have is how do they actually have the money to do it? Like, was a big bank just lending them the money? Generally, the answer is no. Usually the big banks aren't doing these. They're usually involving what they call like a hard money lender. So a hard money lender is a like you or I, or just a smaller institution that said, look, I know you're going to only do this for a short amount of time. We're going to look at your history. And based off of that, we're going to be able to let you borrow a certain percent along with at a certain rate. Let's say it's 10%, because it is higher than a general mortgage. But they can give you the money faster. There's a whole lot of benefits of that. So, but they'll also allow you to borrow up to, let's say, 80%. And then they could fund the renovation loan, or they may not. Let's just say for this example, they do. So you don't have to worry about it. So then the question is, what happens to the remaining $200,000, right? We're buying this $1 million place. We got a loan for $800,000. They're going to cover all the renovations. That's another $200,000. Some flippers or some investors will just pay it out themselves, but most do not do that. Most will then raise a second round, a second lien for secondary investors, and they may pay them a little bit more, maybe 12%. And then that way they actually have zero skin in the game. So arguably, the reason why that $200,000 gain could be incredible is they actually are putting no money down to have basically infinite returns for this project, right? But what's the down? So the upside is there. What's the downside of that? The downside is if the market didn't go up and you were selling a loss, that's also a quote unquote infinite negative too, right? Like you have a very big downside, not infinite, but you have a very big downside of that because you're so levered up. And you're still paying interest on these other people. So what has happened in some cases is they're like, look, we're just going to play this Ponzi scheme, right? We're going to raise money for this. We're going to then collect money from somewhere else. we're going to sell this project, but it's all just kind of this mush. So the way that you really want to handle this typically is like, one, you really want to see the progress of what they have. And before you actually invest with somebody, feel free to track their level of progress. Like they should be, like any of these, the most successful projects are those that are very organized, right? They have the tight project timeline. We're going to be able to do remodels of this, or we're expecting this. Or if they're delayed by a week, everything gets moved, right? It should be very organized. And so you should be able to easily track that. Within a month, if you see the progress of it, then they're on schedule and they're going well. Now, they may or may not be willing to show you the accounting book side of things, but you should be able to see like, how are things progressing? Is this someone you can trust? Are they executing on the timeline? Is it a realistic timeline? These are some things and nuggets that you can do to help yourself if you're going to be a secondary or a primary investor to a house flipper and things like that. So hopefully that nugget helps you a little bit here about explaining like how did this even occur, but it's also not too not too rare either. All right, now I'm going to wrap things up with some of just the big tech news, right? And there's a few things. So Tesla, mass layoffs, well, 10% RIF. Slam Fremont, Palo Alto with over 2,750 jobs lost. This is a 10% workforce reduction happening everywhere, quite frankly. It's not just happening only in Fremont. It's happening everywhere. Palo Alto is where they have most of their engineers and R&Ds. So there'll be layoffs. There have been layoffs there. I think most of these impacts are some are immediate. I think they're all immediate, but they told basically the EDD, Employment Development Department, that I think they said they'll begin later. But you've already seen posts and you already seen news about these impacts. But the layoffs have been across the board, so it's not just all of it's here. It's just across the board because they're not producing nearly as much. There's a little bit of silver lining of it, right? So interesting enough, you can see Tesla was actually one of the worst performing S&P companies over certainly the last 6 months. But you can see, like, because their earnings report came out, that it wasn't as bad as people are thinking it would to be. They're actually, after earnings, had a decent jump. I think it was like a 10% jump for that time. So something to be mindful of. Now, next, another company, Alphabet, their shares jumped 14% on earnings beat. Now, what's really interesting about Google and Alphabet in general, right? Like we keep hearing all this stuff, right? All this, like, it's just ending. It's just not doing well. Like OpenAI is going to eat everything from it. But if you look at the numbers, like, interesting enough, if you look at the last year, I'm just pulling this last year in general, you can see that even Alphabet has done better than the general S&P, and the S&P has done very well, right? The S&P has done 23% increase in 1 year versus Alphabet has done 60%, right? So there have been some just incredible situations. Like all you hear is negative things about Google these days and Alphabet, right? Like I rarely hear anything that positive. But as you see from this, like, it's not actually doing as bad as people may feel within those companies, right? The other one, Microsoft. I didn't have that on. I'll add that here. So Microsoft is, in this case, you can see just a little bit better than the S&P. They had their earnings too. I think nothing that interesting that occurred there. But Microsoft was there. The other one that had their announcement, Meta. So Meta, unfortunately, was a huge winner for a long while. And they had the latest earnings report. I think it was down like 10-15% because of how much they're spending into AI. But still, even today, as much as it has impacted your mood if you work at Meta, you're still, quite frankly, up a significant amount, even more than the S&P, which is also up a significant amount. So I wanted to, like, capture this. It's important to have, like, just being objective as much as you can about it, right? Like, it's still phenomenal. Like, yes, if you're at Tesla, it's a different story, because if the market went up 23% and yours went down 18%, that's a big spread. But most of these other companies have still either matched the S&P, right, like Microsoft, or many others have even done better than the S&P, especially over the last 6 months. So those are big winners relative to one another, because then you're doing better than the majority of other people, right? Never mind if you're working at NVIDIA, right? Even NVIDIA in that case has gone over 200 something percent in the last year. So anyone at NVIDIA, you got to hit me up. I helped many of you guys already buy in the last couple of weeks. I'm going to help many of you moving forward. So any of you that are working at NVIDIA or any of you have friends at NVIDIA, send them over to me. I will help them with their moves, buying or selling. But as you can see, even if you're at Google or you're at Meta and you're at these other companies, what are the companies? Let me just take a quick look. I'm going to do this in real time. I don't even know the result of this one because I know Apple has been going through. So Apple would also be like a similar case as like Tesla. Like people at Apple, yes, you've been accruing RSUs, but yes, you're not doing as well as the general markets have. So people at Apple probably not as active unless you've been it's time or you've been accumulating and things are vesting, and maybe you don't want to bet on Apple anymore from that perspective. Thank you again, once again, for tuning in to this live stream. I hope you enjoyed it. Of course, if you have any questions, you got to leave in the comments below. I'll make sure I answer them either live or if you watch this afterwards, I will get to it to the next one. And I'll see you next week. Enjoy the weekend. Oh, one last thing. I have my open house in Newark this weekend. So you got to check that out. I will leave it in the comments below. But it's a beautiful home listed at $1.988 million. Let me pull it up for you. You gotta check this out. So if you have any friends that are wanting to be in Newark, come join. 4-bed, 3-bath, 2113 square foot. Help my clients already move to a beautiful home in San Ramon. This is the nicest single family newer construction you're going to find because it's only 7 years old, but it's on a decent, like a very large lot at over 5,000 square foot of a lot and a single level. So if you have any friends, come to this open house this weekend. I'll be there Saturday, Sunday, 1 to 4. See you next one. Bye now.